What's up, everybody? Good afternoon and happy Friday. It is John Salama, CMT Trading Trends. Rocco, the usually the new all-time high Maltese dog, but not today. Trump had some ambiguous things to say about the United States' protection of Taiwan if China were to attack. She said it is very important, and that's roiled the markets. I have a stop order right now for to exit EWT due to the repricing of risk geopolitically in the area. And you saw dollar strengthening on days like today when there's fear in the market. And you're going to see what happens with bonds today. Only things that go up is energy and because geopolitical fears and potential volatility and volatility. Those are pretty much the only things that go up. Everything else sells off. Taiwan, their security essentially now is being repriced, and to an extent, semiconductors due to a Taiwan semi being a major holder of that country and of the picture globally. So to recap on the day, kind of a simple video in terms of the day recap. Bonds getting absolutely smoked today. Yields shooting higher, quite a scare on the 30-year, and silver down handsomely. It's giving back half of the rally it's had over the past week, essentially. We'll take a look at the chart. And again, energy, a big pop today, 2%. And when you look back on the entire week, I believe this week's SPY is going to close up somewhere around, the market's obviously open and moving around right now, but up around 50 basis points on the week. So, small up trajectory. The week when you step back was really about the huge 10% pop in oil. Okay, we'll take a look at the charts. And a big 8% decline in gold miners and Brazil. We haven't looked at Brazil in a while. A really bloody week for Brazil. And of course, it's Friday. So we'll do our year-over-year recap to ultimately zoom out and really kind of aggregate and digest all those monthly charts, 12 of them in all, to get one big year-over-year view on what trends are still really, really commanding. All right, let us do screen share here. So just full market picture as well. So hurdles, I exited the rare earth metals ETF yesterday. Got stopped out on that hunk of junk right now. It did not work with the boom, as it were. Rimex did not participate, and I saw it going even lower today, obviously, with the metals. And today, as I said, my order is in to exit copper and Taiwan, both for, what happened overnight, essentially. So you always respect the stop. I don't question the system. Okay, Micron, wow, down 5%, but this company has so much of profit to give. My goodness. NVIDIA, again, these guys are just coming off of a highest $5 trillion, $6 trillion valuation. So 3% being shed there, down to just $228, for goodness sakes. Q's down 1.2%, getting handled today lower. Tesla down 4%. Microsoft up 3%, almost 4%. Intel down 7%. That's ugly. Apple bucking the trend, up 1%, almost a 3%. AMD down 4%. A lot of these trades together, these semis, they've been up so many times now in a row, and there's not even any news. It's just a long line of buyers. So you gotta, momentum cuts both ways, up and down. Amazon down 2%. Russell getting absolutely shellacked, down 2.33%. Google down 1%. Broadcom down 2.5%. The semis ETF as a whole down 3% and almost a 1/3%. Taiwan semi, as aforementioned, down nearly 3% on its own. Taiwan down more. We'll take a look at the charts. So last I checked, I think more. So here's the intraday. So again, don't forget, this is the intraday chart of SPY. Yeah, so here's the opening bar. And I thought it was constructive from the go. It was ugly at the start. I mean, we opened at 742 SPY. I'm rounding for simplicity's sake. And honestly, at 10 a.m., they shot it all the way to 743. So pretty decent. And also don't forget the low is 738 near the opening bell. And then some nice high wicks here, but obviously very heavy. Averages the 20 bar moving average, each one constituting 30 minutes. So this is essentially a chart going back just 3 days. And now our VWAP on the short chart, as I'm looking at here, is right around 740.45. We're holding that. It's actually just flat line going up maybe by 1 penny each hour. So as long as we hold that, I know it's not a good day for many assets. As long as SPY holds a 740.45, I don't think it's going to completely fall out of bed. If it does, I think on the day, day support 739. But let's get out of the noise. We've been talking about how this is absolutely nosebleed territory, and it's absolutely normal. I'm going to say absolutely more time for for the SPY to digest these gains. I thought we'd have bullishness just due in terms of shorter term cycles. bullishness through May 20th. That takes us to about, I believe, Tuesday, Wednesday of next week. My target when I said that, due to just the charts, here's May 5th, by the way, Cinco de Mayo, right here, where my cursor is. This is where I thought the near-term leg of the rally began. There's a couple of reasons. The cycle, also, we also jutted above about that 73 RSI, took another gear. Literally, you could think of it in terms of driving, and you went up another gear. But my estimate then, VWAP that day was 723. And if you remember, I said this market has to appreciate more so in terms of time instead of price, which I know sounds kind of crazy, but think about it in the inverse, when markets have to sell off and they just kind of have to remain heavy for a little bit before the moving averages digest, essentially, or retrace. And essentially my target then was just around, not very far above VWAP. So I want to be long to see where the trend goes, because the RSI is, north of 73 at that point. But really, I didn't say we were going to go much, much, much higher, just vol expansion. And then look at this, almost an exclamation point. Yesterday, we hit 749.5, for goodness sakes. Don't forget, the point of this all is it is absolutely normal for this market to take a breather down to the 721 to 724 levels. Those are your 21-day exponential simple moving averages, middle Bollinger Band here on the 20-day. So a couple of different ways to get there, but they point to that sign. I think we'll get there in early June. I think we will. Trump's comments on Taiwan put a little bit of a stink in things, but I think possibly we'll get some more bullishness. They've been rallying it through the day. I'm very curious to see how we close and how we trade early next week, and what tensions or lack thereof happen over the weekend. But I think possibly we'll get a retracement, a little bit of a small digestion down to that 725 level in very early June. And then we're just going to continue going higher. Market looks very, very strong here. We haven't even been, this is insane, we haven't been below 65 RSI since April 13th. So really just internalize that. We've been above 65 RSI. It's like one place to shop for a month now. So trees don't grow to the sky. We've been saying that for a long time. And that's really it for SPY. So a little bit more of rally into early middle next week. Don't forget, view up on the day, 740.95. They said mine. The high 743. They're still not interested there. I think you got a shot at getting to 750, possibly early middle next week. And then that'll be it, almost like an exclamation point on top. And then get ready for about a 2-week, just a digestion. You don't want to get heartburn from massive gains. But great confirmation. Look at the chart. We're just finally now getting to 70 RSI. And last thing, if you want to chase and you think S&P is just going to continue going from here, as I do for a little, the ATR is 760 basically. So we call it 2X is call it $15. You could chase it right here at 741. If it goes against you by $15, get out is the idea. Basically, it's a 2% stop on that in terms of dollars. Okay, let us get to what they are trading big time today. There are some big movers, and we're only one to the upside today. Obviously, whenever something geopolitical happens, country maybe not protecting another country in case of an attack, energy spikes, and that's typically how that goes. We liked energy. I said it was going to be in a bit of a rough patch as beta is being gobbled up here, but in terms of buying, above inch of strength here, the RSI is finally above 50. It just did that 3 days ago. Nice strong candles here. View up today, 58.81. They said mine. High of day, 59.15. It's 2 cents away from that right now. Just do understand the 21-day exponential moving average is 57.57, so it's not getting super extended from that. You got a kind of a sloppy W here, going back all the way from April 7th. 52-week high, all-time high, coming March 30th at 63.5, essentially. So $4 off from that. I would love if you were able to pick this up under 57.5. I don't think that is where my cursor is. I don't think that's, that's for the genie from Aladdin. I don't think it's going to work. We have to have risk management, not wishes. So better framed. I think this could head. I don't really love the trade. I think it's probably headed to 60 in the next couple of days, but I think there might have some tumult here. It's very headline driven. So if something positive comes out of the summit, this could easily drop to a 56 handle. So just observing more so. I don't have a position specifically in XLE. I am in PDBC, which is, silver as well, energy, food, etc. It's a little bit of everything that's in commodities land. But that's the tell on oil. I still think it wants to just find a base. I think it wants to put in this floor at 57 and then bounce its head, meerkat to 60, and then do this dance again, basically. So, you could sell 61 calls. Don't think it's going to pay a ton. And then also, I think you could sell, the 53 puts. So a strangle idea, possibly for going 3 weeks out, collect that theta. All right, the losers, and this has been dramatic today. T to the L to the T. That is not a name of one of the 10 Drake albums he released last night. We referenced my boy Jalen Hurts. Go Birds. Schedule came out last night. I'm hoping to come to several games. Go Birds. What's not going right now is bonds. Looks absolutely horrendous. TLT, this is a significant, I think, 2 sigma move. Down 1.4%, and TLT is a massive move. Don't forget, bonds peaked in terms of price October 21st. This is when Bitcoin was going crazy, the prior NASDAQ highs. And the chart looked, nothing sexy here, nothing to get really excited about until March 11th. We fell out of bed. We haven't visited the 200-day since. So understand this is a week after the war. And TLT bonds have not looked well since. The 30-year is north of 510. It's kind of interesting. Bank of America put out a note back in March about, how we're going to have if the 30-year goes above 5%, the Trump put was going to come in. And he was basically, going to buy stocks essentially and have some market play. The 30-year is above that now, but the market's basically at all-time high. So it's very interesting trajectory and how you get there and why and how fast. So very close. TLT, the 52-week low, don't forget, is the last May 22nd. We were just at close to Memorial Day last year. It's 83.30. It is very close to that. Today's 83.69. Don't forget, obviously, price goes down in bonds. Yields absolutely shoot higher. TLT looks bad here. I would think it bases around this and finds support around $83. They haven't let it get oversold all year on an RSI standpoint. It is getting very close. It's at 31.6 here. Ugly candle. I'd like to see at least strengthen around 83.90. It's close. It's 17 cents away. I want to see how it closes, but I think this will base, find a floor around $83, and then have a ugly non-linear bounce to about the 85 half mark. And that's about it for bonds. But really the dog of the day here, everything's about this chart here in bonds, whether it's this or SPTL or a similar fixed income ETF. But the focus is on bonds. And then the second biggest sigma mover of the day outside of bonds is silver. My goodness, I'll say it when I'm right. I'll say when I'm wrong. This was my, the ticket to Cash Tag Awards. I said buy silver and had a massive, massive week. This Gravestone Doji looked suspicious to me. And why? This was 2 days ago. This is really important. The high was 80.86. Some sucker bought that. VWAP on the day was 79.49. The close was underneath that on an up 1% day. That is not a great vibe right there, especially after you just had a massive rally, truly, with an opposite doji on the 29th, just exactly 2 weeks ago, which represents a short-term cycle, which that rally encompasses $64 to $78. What's more you want? That's 22% or so in my head. So now for the silver, I think that was it for the move. It tapped its head at my target was honestly 77. Where'd it get to? 70. It got to 81 essentially. So market gives you a lot in a little, and sometimes a little in a lot. I think it's got now 2 weeks or so in the penalty box with a floor of about $64. So I think the bigger highs here, this is constructive to me. I like what I'm seeing here. You got kind of like a big wedge pattern, rising 200 moving average, although it's obviously losing momentum, kind of getting fly here at $58. We are south of 50 RSI. Don't love to see that. Obvious clear peak end of January, $110. It's like flashing, motel sign lights at you and stuff. I think this has a penalty box now for 2 weeks. I would not touch it here. And I think it'll hit a floor, I think around 64, but if folks bludgeon it and there's a global bull market, it's possible that they just don't love the metals here and they sell it down to 61. It's as close as it's been to the 200 moving average, and that'll be your setup. I am not over the story by any stretch. A teaser for the end of a segment when we look at the down or the biggest movers year over year, but down 8%. That is no joke here. Trade ideas. Obviously, SLV is not ready for $81, so you can sell those calls, I believe. Buy something against it always so you can sleep. Always. Otherwise, in terms of the puts, I think it has some momentum here to the downside. You could buy, it's going to be expensive, but you could buy the 70, I don't know, be a little bit in the money, the 70 puts. Otherwise, you can chase and do something crazy like the August 65 puts. Obviously, I'm not saying it's going to be in the money or anything like that, but as soon as this 2 weeks is over, then you would sell out of that position. Ideally, it went down with you. But that would be my trades for that on SLV. But yeah, it is not ready for $71, and that's been the fact since March 2nd, since the war. Interesting how that happens. So it's just had a ceiling on it since exactly the same time frame. And that is it for the day in terms of the biggest gainers and movers. They're loving energy. They are hating bonds and silver. If you are in those areas, allocated long in energy, congrats, because you're doing some gains today. Otherwise, if you're in bonds and silver in any way, shape, or form, you're getting hit today pretty hard. All right, top 3 gainers of the past 5 days. Let's do it. The best gainer in all of ETF land, oil, up nearly 11%, average of 2% a day. Today doing just more than that, nearly 3%. This group the oil hit 52-week highs just about 2 weeks and change ago at $151. A nice hold here of 129 and up and away here for U to the S to the O. The top 3 gainers of the past 5 days are all energy related. So let's see how similar charts we get. This had a beautiful, so I said this had entered the penalty box on Cinco de Mayo when we got that rotation. Folks flushing into S&P. I saw that new leg of that rally taking hold. And here I said oil is a no touch on May 5th due to basically people chasing beta and getting just different allocation in other areas. And oil that day was off by 2.3%. And it continued to go down for about 2 more days, and now it's risen. More so in terms of a cycle, I didn't want to touch oil till about the 20th. That is, still like Tuesday, Wednesday of next week. So around then, it's it's not always exact. It's RN side. That's Wednesday. I believe this will base here. I like the floor using the 21-day exponential moving average of a floor. That's 138, which it looks like minus this oopsie. It's been here for about almost 3 weeks, north of 138. Minus these ugly 3 days here, still holding 50 RSI. There is an appetite, obviously, for oil. Now we have potentially, maybe geopolitical unrest or volatility, ambiguity in Taiwan and China, and of course, Iran still simmering. So there's a bit here. Flows look great in terms of 3 to 4 o'clock. Those are great looking candles. Honestly, going back the entire 2026 since the whole Venezuela capture thing kicked off the year. Fun year. But we're still up double-digit percent and happy to be trading these markets turtle style. So this looks decent. I want it to base. I would love if you were able to get in under 137, 138. Obviously, that looks like that train left the station short term. My target here is 153, which would be a new 52-week high. I think oil gets there in the next 2 weeks. Trades, I do believe you could sell the 130 puts going at 3 weeks, collect that theta, buy something against it. Buy like the one, $2 strikes inside cheaper, something that's liquid. Otherwise, you can buy the calls. It's going to be a little bit pricier. I'll probably do maybe the August 155 calls. I think those will reward. Sell something against it as well, though. Don't forget, super headline exposure here for oil. You wake up, it's the biggest mover on the day. Rubber bands go, one way, and then the slingshots the other way. You can get hurt. So, but those would be my trades. I think oil is higher in 2 weeks. And it's begun today. Due to the trajectory, it's had a massive 8 days already from 131 to 147. It may have a little skip and go, drop down to 142, and then go higher. But I do like the floor of 138. You can even sell those puts probably near term, going out maybe 10 days or something like that. But oil, I think, goes higher. Number 2 thing they love this week, not up as much as oil, though, is natural gas up 7% or 1% and change a day, literally doing exactly that inside of trend. Look at this, what we mentioned before, going to its 50-day moving average is literally exactly where it is right here. USO, UNG, a great rally, still very heavy 200-day moving average, $1.20 away, so more than 10%. So it'd have to do everything it did this week and then some. This looks good. It's above 50 RSI. It's to 56 for the first time since this little meerkat here. I don't believe in that gas. I always say it makes widowmakers of us all. I think this is going to hit its head right around here. this had been my level. Let me go to the trend lines here. Straight line. A lot of price discovery at this level. Honestly, going back, 11.5 or so, going back to October, those former highs in, Bitcoin, everything else. So really encompassing different environments on the way to its 52-week low in mid-January when this struck, 995. So I think this is getting tired right here to focus on the intraday action. View up is 1127. They said mine, high of day 37. It's off by that by 6 cents. So maybe it goes a little bit higher into Monday. I do think there's a lot of resistance, though, here at 11.5. You could sell the 12 calls. I think it's getting a little bit long in the tooth. Otherwise, You could possibly buy the 11 puts, but go out to like August and always do something against it so you can sleep at night and survive. And the number 3, again, the correlated movers all this week, not a ton. S&P up about 50 bips this week. Was energy the third biggest mover, up 6%. So a percent and change a day, doing more than that, up 1.7. Don't forget, XLE peaked March 30th at right around 63.5. Beautiful hammer here on April 17th. Beautiful also hammer here essentially on May 7th. Really sparked this leg of the rally. I think XLE may have just a small move down to about 56 just to shake some folks out, into early middle next week, but it looks strong. View up on the day is 58.79. They said mine, and it literally just hit high of day about 9 cents ago. So looking very strong. There is significant resistance, I will say, at $60 even from the week of the all-time high. So you're getting pretty close. This is going to go kind of similar with what I said in terms of this has to appreciate in time versus price, just because I think the ceiling is about 60.5 near term. So, but I do think it has a bullish 2 weeks, though not in a straight line, kind of resembling what I said about USO, Dodge, the correlation. But looks good. It's been up, 4 days in a row. It's really since May 8th. It's just had, since Monday, just up. So beautiful support there, 55.75 and XLA up 6% this week. Trades, yeah, I mean, I think that you could sell like the 54 puts. I don't think it's going to pay going, 3 weeks out, collect that theta. And then I do, basically selling strangles, selling those 61, 62 calls. That looks like a play too. I suggested on XLF the other day, and that would have worked as well too. So that's the idea. You got to throw things out there for options. It's kind of like the standing on the nail idea. You step on one, you're going to get hurt. You step on a lot, and it's 1% per risk per position in the portfolio, and the things work really well if you have multi-bagger, especially in terms of options. All right, let's do the top 3 losers of the past 5 days. GDX, the biggest loser, absolutely getting pummeled, down 8% in the past 5 days. Yes, much of it down from today, down 6.4. Look at the significant resistance here at basically $98. It used to be a floor here in middle of April, and now significant resistance since that period. So GDX, the worst place to be long this week was the gold miners. Ouch. I think they're having, so this is pretty significant. I think this is very, very, very interesting. I think this group right here is having a bit of a relative strength breakdown here. I think it's getting ready for a next leg lower, which is going to jeopardize the 200-day moving average. I think this has a ugly 2 weeks. It doesn't look good, and I think it wants to move potentially towards that $84, getting very close to the 200-day moving average, which is going up now by about 15 cents a day. I expect it to go flat soon. I don't like the lower highs here, obviously. Back then, in mid-April, it was grappling with $102. Now it's grappling with 98. Is it possibly, next time grappling with 94? Yeah, maybe. That's what it looks like to me in the chart. So I think this has 2 weeks in the penalty box. I think it actually kind of makes sense to sell. It's far above, but it's high vol. Maybe you get paid something to sell the 97 calls, buy something against it, as I say always. Otherwise, it kind of looks alluring to me. I hate to say it, just because, gold miner is one of the GOATs in terms of year-over-year leaders, and I like trends. But I don't think it's a crazy idea to buy, like August 85 puts. It's getting very close. They're expensive. It's had a bloody week. But the chart looks like to me this is not looking great for the gold miners. I'm not having the same, vibe like I did on silver. Next, EWZ, Brazil, ugly week. These guys peaked April 14th, seems like a long time ago, a month ago. These guys hit $42 and a fast move here, almost oversold. Ugly candle today, 12 cents off VWAP, down 2.5%. It's been getting hit all week, about 1% and change a day. Today, strengthening that with the geopolitical concerns. Whoops, there you go. Brazil here, I think it's going to base. There's definitely worse places you can be in. I structurally like the floor. This is the problem. I liked the floor at $37 and boom. So if you like that 37, you got to like it 36, right? But just due to some of the, movers here going back from weakness with the rise to 200-day moving averages and how extended they got away, you got to keep those things in line. It's not untouchable. Unthinkable that it gets to $34. So that would be my ultimate support here. I wouldn't, I'd wait to buy into strength on this, but I do think it bases this week, And I think it makes a not linear move towards 39, but a tough picture here for Brazil. Down, honestly, it also reminds me of Bitcoin from October. It's almost like everybody got the memo and just exited stage right. This one took a little bit longer, but an ugly, ugly move here in Brazil. Just basically straight down almost for a month. And the third or second worst place to be this week after gold miners is Brazil. Yikes. Wait for a close above 39 and you can buy into strength and participate in this trend. But ugly, ugly place, Brazil. Second worst place after gold miners, obviously a gold rich nation. And then number 3, worst place to be. Sad I got stopped out. I took my profits and ran, which is A-okay. But Anyang, love you, South Korea. Crazy, crazy place. Down 5% today. Look at this crazy zigzag. Seemed like an overreaction here. This ugly 7% move on Tuesday. It came right back, and now we're basically getting very close to it. View up on the day, 180.12. It is above that. High of day, 182.75. So they're not interested in that. You got to be careful. This is very tough to chart. This is like trying to drive in a thunderstorm, and you can't see anything. So with high vol, your forecasting is very, very limited. But be careful with this instrument. I would only buy personally on breakouts. So essentially have to get above the highest close, which would be 193. So I need a $13 rally for the turtles to be to interest me. But this could go wayward south for the next 10 days or so, I believe, towards about 169, 168, around there. I think that's A-okay normal. It has been impressive, though, because everyone wants to bid up this AI memory game, and this is a great way to play it. Look at these hammers. When they come in, the buyers really step in. Don't forget, there's also 60 RSI. So take in context the amount of strength this has had and the level of bidders and their aggression. This has not been in the doghouse truly since early April, quantifying that through a sub 50 RSI. So EWI, we'll look at it too at the end with the biggest gainers of the year. But South Korea on sale today, 5% off. Stock market, of course, the only place where you get 5% off and people are pissed. All right. And that was the top 3 losers of the past 5 days. If you were in gold miners, I was not. If you were in Brazil, I was not. If you were in South Korea, I was. Those were really, really painful this week. Don't think trends are generally over, but some things have to dissipate. Top 3 trades of the past 5 days. If you were long USO, short GDX, and short Brazil, congratulations. Those are the three best trades in all of the ETF market. All right. Now, my favorite part of the show, I'd like to anchor my portfolio around these if I can. The best trade of the entire year. Oh, look at that. I didn't even have to change anything. EWY is the best trade of the year, up 205%, ladies and gentlemen, year over year for a 1X Geo ETF. Yes, I know they're the gens over there, but that is absolutely astonishing. This stock ETF last year was basically $60, and that's how you get to 180, 300, 3X or 200% EWI. I already told you, buy it if it goes above 193, or if you have no position and it drops to 168, which is your 21-day exponential, and would likely correspond with a 50 RSI visit tap. I don't think it does. I would get long. This flushes up and it flushes down. This trade is not over, I don't think, by any stretch. That is your top trade of the year, South Korea. And it's important to understand, look back. Some people were doing this. I was doing it, quantum, and then it was really all just trailing. You got to stay with the puck and where it's going. This is the best trade of the year, and it peaked. Let me look at the calendar. 4 days ago. Okay, so there's still meat on this bone. That is EWI. Number 2, we didn't talk about this today. The SOXX is your number 2 trade of the year. So this EWI is up 205% year over year. SOXX up 140%, y'all, going from last year $200 to now $516. I am long the SMH, or I was long the SMH in the portfolio. I would do the same thing on this in terms of buying the breakout. Highest close was 533. That's when I would get participating. This has only dropped to 67 RSI. It's absolutely insane. And we've been above 55 RSI for 5 weeks. So really, really, really hot, obviously, part of the market. This should cool, and I am not shocked at all if this powerful hammer is here as well this week on the 12th. And also, we'll see today, VWAP is 513.62. They have rallied it against that, even though it is down nearly 3% on the day. I think this is in the penalty box, potentially a soft penalty box for two weeks, down to the level of about 475. And I know that seems crazy because that is 40 points away, and that's going to feel very, very painful, 7-ish%, top of my head. But that would be okay here. Look at the stochastic momentum. It's just just nonstop up, and you combine that with all the green days it's had since March 31st, it's had like 5 red days since March 31st. It's very hard to do that. That's just really hard. That's like putting out platinum albums just day after day after day. We can't only be you, Drake, I suppose. So that's absolutely insane. SOXX, again, in terms of momentum, this peaked 4 days ago. So you have to allocate some amount to South Korea, semiconductors. Yes, they're similar, they're correlated in terms of tech. And then the third one, silver, and you need silver to make some of these things, obviously. We looked at the silver chart earlier. It's your third biggest leader. It's crazy. That third is silver. Folks are using, so much degeneracy used to trade in silver, as you can tell from this chart, and yet bigger gainers is South Korea and semiconductors. So understand that in terms of where folks are placing their money. Silver totally not ready for $81. And yes, I know it's the third best trade year over year, up 132%. So basically very similar to the SOXX. I think this is in the penalty box for 2 weeks, and then that'll set up your invitation to get long. Totally different, I think, by the way, because I like the move higher here versus the GDX. GDX does concern me. I think that's going to roll over, and their expenses are higher due to higher oil. This is the actual metal itself, so it's there's no cost component to that direct versus the GDX. So I get it losing its alpha in terms of GDX versus silver outright. Silge is good too, but not as much as SLV. Last I checked, due to the expense component. So SLV, I think you'll get your invitation in about 2 weeks. It could go as low as about even a $62. And I think that'll be your invitation. Breathe. All right. Hope you have a wonderful weekend. I think get outside. It's supposed to be like 90 degrees out there. We'll look at nat gas again. I'm sure there'll be implications. And we'll be back on Monday. Peace.